Good afternoon. What an exciting week in Hong Kong. I hope all of you have been enjoying the panel so far and met new people at our summit. For starters, I'd like to remind everyone that we do have a Q&A session at the end, so if you have questions, scan the QR codes on the screen, and we will try to go through some of the questions at the end of the panel. Now, family offices from Hong Kong to Singapore and New York are flexing their financial might. In volatile markets where other investors are shying away, we see these entities stepping in and filling an important gap, investing in everything from hedge funds to private equity and venture capital and luxury. There's such a wealth boom in Asia, so much so that we're seeing the flourishing of entities and people asking, just what is it to make a family office? I can't think of a better group of people to discuss these questions other than my fellow panelists. So I will start with Ming, who is sitting furthest away from me. And Cambridge Associate is an important asset allocator in the region. I'd like you to start by telling the people here a bit more about your investment strategy and also who are your backers and your main focus.
Yep, sure. Thank you so much. I'm very honored to be here and to share the stage with two great family office investors. Cambridge Associates, we are a global investment advisor and asset manager. We advise on over 600 billion of assets on behalf of our clients. And these clients are global wealth owners. A good portion of our business is with private clients, almost 27%. And then here in Asia, about half of our business is actually with private clients. So this is near and dear to what we do. I would describe our approach as we serve as the investment engine for our clients. That could mean setting policy, setting the right governance structures, all the way through to manager selection, doing the sourcing and the due diligence of all the ideas. And for some clients, we even take it all the way through to full implementation.
So a very broad spectrum of family offices and investors. Helen, and of Trinity, very familiar name in the region. Can you talk us through the background of the Nanfeng family and also your focus?
Sure. So the Nanfeng Group was founded about 71 years ago by our current CEO's grandfather. So we're currently in the third generation. The company started out as a textile manufacturer here in Hong Kong and then progressively became a real estate developer and investor. And then about 10, 11 years ago, started to do life sciences investing as well. So out of San Francisco as well as out of Shanghai in both US and China. Now our family office, or NF Trinity, has actually been operating for a couple of decades, formally and informally for even longer before that. And I joined about 6 years ago from BlackRock, and I was working in an institutional investing background and decided to take on something different. And now we're basically doing pretty much everything under the sun. So public investing we do in-house, and we do the top-down asset allocation, security selection. When we like certain regions, we may not know so much about the individual stocks. We'll look at the ETFs and other ways of getting exposure. On the private side, we do a combination of fund investment as well as co-investment, so mostly fund investment. And we've got 6 people here in Hong Kong on that side of the team, allocating to many funds around the world. We have more than 100-something investments accumulated over the years, VC, PE, private credit, secondary, you name it. So we're very consistent in terms of our deployment on a year-by-year basis. And we've also recently, in the last few years, developed a big data team to help us in terms of our investment processes as well. So
I'd like to get in all of those investment strategies later on. Moving on to Joe, tell us more about your family office.
Sure. So I manage Globaltec Capital. It's a single family office based in Taiwan. The background of the family office is in semiconductors. The family started the second largest semiconductor design company, and we make global investment for the family office. When I talk to people that our background is in semiconductors, people automatically think that we are heavily focused on technology investments, which was true. But I also wear another hat. Besides the CIO at the family office, I'm also an adjunct professor of finance at HKUST. So I believe in more of a diversified approach, traditional, or if you call it a typical sort of asset allocation. So what I've been doing is to try to steer our family office into more institutional style diversified investment approach for long-term capital preservation and appreciation. So hearing what Helen just mentioned, we are very similar. So our public portfolio is managed by us in-house, and we allocate to GPs, managers for our private allocations.
You mentioned a very important word, which is institutionalizing your family office. And given the flourishing of family offices in this region, I think that's a new concept to some. In your opinion, what makes an institutionalized family office? And when it comes to, especially when it comes to the investment committee, what are some of the traits and how do you structure it?
Sure. I would say 3 criteria when I look at a family office, whether it's institutional or not. Number 1 is whether this family office has significantly number of professionals from outside the family who have significant voting power or say into the decision-making process. Number 2 is whether this family office has a sound structure, whether it's internal control structure or decision-making structure, whether that's already set up. And number 3 is whether this family office, based on its investment goals or whatever goals it has a, I wouldn't say textbook style, but a more proven system to achieve those goals.
And Ming, how important do you think this concept is even? And when you talk to all the family offices out there, who do you tell who's real?
Well, there's a lot of, I think, concepts that Joe just mentioned, which are very much great signs of best practices. But for many families out there, their journey actually starts much earlier. And for some families that we speak with, they're still deciding on their overall vision of the family office. Their overall, where should the family office reside within the whole wealth construct? Is it the umbrella of everything, or is it a business unit? So some really key fundamentals, questions of what the family office should be. One of my colleagues likes to say, once you met a family office, you met a family office. It's very hard to make broad generalizations about the segment, especially when it's quite fragmented like it is here in Asia. Many are very early on in this institutionalization journey. So one of the key things that we help them think about is, how do you go from making investments that's very line by line, very transactional, and taking our best practices and our frameworks that we have been applying to clients for over 50 years, to helping them think about best practices towards investing. So one of the things that we do is, for clients who have historically maybe have done a few private investment funds here and there, how do you do a big program over years? How do you think about commitment pacing? How do you think about manager selection? So all those things are tools that we bring to the table to help them along that institutionalization journey.
Yeah. And Ming, your fund has been doing this for a long time. What are some of the key lessons and takeaways from you? I'm sorry, I mean Helen.
I think in terms of institutionalization, that's something that we definitely very much believe in. In fact, when I was considering this role, that's the primary focus that our principal mentioned to me, that we wanted to really revolutionize and kind of jumpstart and kind of restructure into a very institutionalized family office. So, I agree with everything that Joe said in terms of the characteristics, so including, for example, rebuilding the whole investment team in terms of hiring from the top-notch, well-trained, buy-siders, sell-siders, and all the relevant, backgrounds, professional backgrounds. We have processes that are as institutionalized as we can make them. So, for example, on the PE side, we have IC for all of our investments. We have very large memos, 60, 80 pages, complete with reference calls and quartiling and so on and so forth. Proper discussions, pushback, and sometimes things getting rejected from time to time. On the public side, we have, very stringent research. We have templates. I kind of shifted over all the processes that we have at BlackRock over to our current setup. I would also add one other aspect that Joe didn't touch upon as well, which is I think the middle and back office. So we have a very robust middle and back office now of 20-something people and a lot of software. So for example, we don't track all of our trades in an Excel spreadsheet that we update manually or anything like that.
How is AI helping with the process?
Yeah, so we have a lot of, we probably have 10, 20 different types of software for doing all sorts of settlements and everything on a very professionally institutionalized way to make sure that there are no errors, et cetera. And then we've recently also started a 4-person big data team to help to lend insights to both public and private investing, monitor top-down macroeconomic trends, do web crawling onto employment websites in the U.S. to see whether we think that the wages are still going up and therefore going to fuel service inflation, or whether we see more job openings in certain areas. It helped hugely during the COVID to figure out where the supply side constraints and bumps were. And then on a bottom-up perspective, it can also help us to figure out, for example, credit card receipts for a certain brand that we're tracking, or how much discounting is there on certain SKUs of laptops on certain websites to gauge what the margins for certain companies could be. So those are all some of the things that we think are really exciting opportunities in terms of institutionalizing the family office operations.
And lots of investment in the technology front. Yeah. Joe, you and I were talking about this very interesting case lawsuit happening out of Singapore, and the founder alleging that the staff misappropriated some money. When people see a case like that, what do you think that says about the pitfalls of family office structures, and how do you avoid these risks?
Right. So stepping back, that happened firstly because family office is such an emerging new thing in finance, new theme. Many people, especially in the emerging market, from mainland China, other parts of the world, are looking at family offices, forming family offices. And then opportunity came, they formed family office, but they are trying at the beginning. So there are chances that they may find out that they hired the wrong people, like what the case did. I think it's a normal trend for many of these family offices. They're going to have to experience one way or another way of failure, either staff, the team, trust building, or just the failure of the internal control system. Back to what I mentioned, the structure of the family office. It's going to take time. I think developed market also took some time to learn about how to set up family offices. There are some industry best practices, and those are the cases I'm bringing into my class as well to help hopefully let people know and learn ahead of time what mistakes other people have experienced in the past, and to learn the best industry practices. But I would say that we are still at the early stage, and things like that would probably happen again sometime.
Yeah. So in the initial phases, lots of trials and errors, but are there any other interesting trends that are emerging out of Asia that we're not seeing in developed markets? Open question for all of the panelists here.
I'm going to go first.
Okay.
Because I'm so excited. We were talking about this in the back. Number one is AI. I think the speed of AI adoption here is very fast, including myself. I was telling you that our investment memos these days, my boss is not here, but I do not draft investment memo with AI. But definitely every time now, before I submit an investment memo to our IC, I do use AI to go through it, and sometimes rewrite certain wordings or structures, giving me advice back. So those things are getting into my daily working life. That's one trend. Second trend I've seen among family offices here is that a lot of family offices are getting more institutional and professional based on the topics I've seen in the discussion groups. 4 years ago, I've seen mostly people talking about direct investment deals. What are the opportunities, pre-IPO items, right? It's all very direct. I would say, one-off things. But these days, I've seen way more sophisticated transactions. I've seen people talking about secondary transactions, asset package buying, credit secondaries, all new things, and all very sophisticated investment approach. People are now focusing more on the so-called SAA, strategic asset allocations. So those are signs that people are getting more professional, institutional.
Somewhat similar to what Joe's saying, but I do think there's something to recognize that a lot of Asian families, if you think about the wealth creation moment, these wealth owners oftentimes continue to be very much involved in their operating business. That entrepreneurial commercial spirit, I think, is a common thread amongst many families, which leads them to adopt new technologies faster, which leads them to actually be quite resourceful about finding out what others are doing in the world. I think it also leads them to be quite commercial in certain ways. So it's not uncommon to see single-family offices think about a multi-family office approach or how to even commercialize what they're doing. And so I think this is an interesting trend that will present both challenges and opportunities, and that's quite unique here to Asia.
Yeah, exactly. We are seeing large single-family offices opening up their investment capabilities, which is also an emerging trend here, and also the fact that the wealth builders are still in power and controlling the money. That's also an very Asia phenomenon. Helen, since we're on the topic of comparing Asia with the rest of the world, I wanted to ask you, you mentioned that you went to the U.S. recently. The fellow family offices in the U.S. and the asset allocators over there, are they renewing their interest back in China? And what are they doing? What are they investing in right now?
I'm afraid not. So I think there's two major observations. One is that I think, at least for the time being, the family offices in the U.S. are still more institutionalized on average versus the ones here in Asia. They're a lot more collaborative and communicative with each other. So that's something that we think is a huge opportunity for Asia. And we're actually trying to do more of that here in Hong Kong, China, get more family offices together to share ideas, learn from each other, improving the kind of economies of scale so that we can also be a more attractive destination for GPs from all over the world to come to visit us in Hong Kong, right? So we've been doing more of that here to try to narrow the gap. And in fact, that's the first place where I met Joe previously when we organized one of these events and could all share ideas and learn from each other. I think the second area where there's a gap, though, is like the differences in terms of asset allocation and focus. So most of the Asian families, especially the Chinese ones with offshore capital outside of China, want to diversify as much as possible. And the market here has gone through so many ups and downs and cycles, and certain asset classes like Chinese property high yield bonds are probably structurally no longer going to be available, et cetera. So, family offices here have had to be really nimble and try to just, put a little bit into each bucket. The family offices in the U.S. are almost entirely doing like a barbell approach of a whole bunch of cash accruing 4.5% interest rate, and then Mag 7 and U.S., S&P, because they're like, this is what worked for us. Why do we ever have to have anything outside of the U.S.? We have like the best market, the best, structure, the best innovation, the best people, and the dollar has been so strong. So there's no interest, hardly at all, in terms of having anything outside the U.S. And there's very little interest in terms of having fixed income either. So, the safe part of the portfolio is the cash, and then the higher, risk is this part. I think in the last 1 or 2 months, there's a little bit of interest in Europe coming back because of the fact that U.S. is going into contractionary fiscal policy and Europe is going into expansionary, and suddenly you see the euro strengthening and the dollar weakening, et cetera. But with relation to China, I think there's very minimal interest and very minimal exposure. People feel like, gosh, I haven't had to be there for the last umpteen years. Why do I have to be there now? Or I don't really understand the geopolitics, or they think that the RMB should be depreciating significantly going forward. So I don't see much interest in coming back at all. I think a lot of the capital that's helped to fuel this recent rally has been either southbound from the A-share market, or the occasional macro hedge fund, or fast money elsewhere.
Yeah, interesting. I wanted to ask about the alliance that you mentioned. Is this how formal is this when you talk about forming together a group? Are you going to invest on behalf of these family offices, or is it more of an informal kind of?
Oh, it's been very informal so far. We just got this idea after I spent a couple of months in the U.S. last year, and I just really enjoyed all the collaboration that we had with the different family offices in the U.S. And so I said, oh, why don't we try this in Hong Kong as well and meet other family offices, learn from each other, etc. So it's been very informal. We've had a lot of lunches and seminars talking about various topics of interest that people have in common, or sometimes we have some friends coming into town and we'll have like expert speakers and people will gather around and talk about things. We had like a CIO luncheon in January of this year, getting like 15 CIOs together to talk about our best ideas for the year. It's all very informal, but I think it's been a fantastic experience so far. I've learned a lot. The first week of January, we had a luncheon, and somebody actually brought up DeepSeek. And I was like, what is that DeepSeek? I've never heard of this before. And so we talked about it for a couple of minutes, and I went back to the office and said, let's do some research on this, and maybe at some point it might be useful. And then 2 weeks later, it was kind of like the only thing that anybody was talking about. And we had actually already done some research, and that would turn out to be very, very helpful and timely. So I think it's a great way to learn, and we'll continue to try to do more of that. And maybe over time, we'll work on some projects together. Like, for example, last year we did a GP investment into a new area that none of us had looked at before. So like 4 families shared our notes and our due diligence and met once a month for 3 or 4 months to kind of debate and talk about it. Maybe over time we can do more co-investments together, et cetera.
So more of a sharing of ideas. In the conversations with these different LPs, what are some of the pain points or divergence of interest between the LPs and GPs? I'll throw the hard question to Joe to start with.
Sure. I think we've seen quite a bit, but I think it's easier to demonstrate via a live example. So last year, we encountered the situation that one of our GPs has major exposure to one company. The company's cash flow had problems. And it was we made co-investment. That's why we had so much information. And then we were basically parallel to the GP on the company's capital structure, so we can see all the decision-making process. From the GP standpoint, sometimes it's not even GP, but the staff person who is in charge of the deal, maybe also having a separate interest from the GP, and of course GP and LP. So from their perspective, the valuation was down for the company. Actually, we wrote off 90% of the company, and they want to double down. So on the new round to save the company. But from LP's perspective, we just want to save our money, not to spend more money on a company that's proven to be not successful. So then you see the interest not perfectly aligned. For the GP, if this company goes to zero, they don't get the carry. For us, if the company goes to zero, we lost all the money. I think for the past few years, we've seen a lot of this happening because if you remember last round of financing, many of these companies rose capital around 2021, 2022. That's when the capital market was filled with liquidity. After 2 and 3 years, they run out of cash. Now they are back to the market trying to raise money. And that's when you see there's a crunch of liquidity with the still high interest rate. So there will be a lot of things happening like this, and like investment exits, like GP fund extensions. I've seen a lot of those divergence in interest.
So when something like that happens, who gets the final call? And Ming, any advice on how to settle these issues?
Tough one. It's, oftentimes our work actually starts, hopefully, well before a situation like that begins. And GP-LP alignment is so important. We've got over 170 just investment professionals solely focused on alternative asset classes where this alignment is essential, right? Where we hire a manager not simply because they're going to generate really good returns, but they're also going to be really good stewards of our clients' capital. And when you get into these situations, well beforehand, what we're focused on is making sure that the managers themselves, alignment works when everything's good, everyone's happy, right? But when the music stops, that's where the alignment gets tested, just like that example. We definitely we advocate. We definitely have a lot of conversations. We are very firm on where we stand, where we want to represent the best interests of all the LPs. Unfortunately, things like this do happen, right? The other thing I would also add is that in this market, being an LP is not easy. The options that you have available to you are vast. And then the decisions that you have to make, once you make the original investment decision afterwards, are also multiple-fold. And so it's not so easy today, I think, to be an LP, which makes the original underwriting, the relationship with the GP so much more important. You have to treat it like a long-term partnership, but you're very much on the same side of the table as them, right? Don't be afraid about pushing. Don't be afraid about advocating for yourself.
I'm conscious of time. We have time for one Q&A question, and the audience one of the questions focuses on the policies and support for family offices in Hong Kong, and why Chinese family offices should set up in Hong Kong versus Singapore. Any takers for what policy support that you like so far, and what you want the government to keep doing?
I'll go first. I just want to say that the Hong Kong government Invest HK is one of the groups or agencies I've seen the most proactive, active of all the agencies or countries I've seen across. I went to events in Singapore. Actually, Singapore government sponsored events. I don't know how they let the Invest HK in. But they were there advocating Hong Kong family office programs, right? It's crazy. I went to events in Shanghai, in Beijing. They are everywhere. So this is sort of the effort they have, and demonstrate the determination and ability to attract global capital and to attract the family offices to set up in Hong Kong.
I don't think it's necessarily even about specific additional supportive policies. I think it's just really, Hong Kong just stands out on its own in terms of the unique positioning within the global investment landscape. So I was literally having this conversation with a friend yesterday afternoon, and he said, "Oh, Helen, I'm looking for a CIO for my family office. Can you help me to find one?" And I said, "What are you looking for?" And so he talked a little bit. And I said, "Are you looking to do offshore investing or onshore investing in China?" He said, "Offshore investing." He said, "Oh, I'm thinking about getting the person to be in Shanghai so they can be close to me and my family on a daily basis." And I said, "Well, if you're going to invest into offshore funds, whether they're hedge funds or private funds, or you want direct deal flow, or for the public side, you want to see these companies that are offshore at conferences," I said, "for all of this stuff, you have to be in Hong Kong. You can't be in Singapore." I said, this person doesn't have to be next to you physically. They need to be next to their investment targets, right? I said, look, these GPs are not coming to Shanghai. These companies are not going to roadshow in Shanghai. They may go to Singapore from time to time, but a lot less than Hong Kong. In Singapore, they usually allocate one day, and it's sovereign wealth for most of the day. In Hong Kong, they'll usually stay for 3 or 4 days, and you get a lot better access. So I think the more that we have a critical mass of families setting up here, the more that we have events like this, not necessarily just events to attract family offices specifically, but the HSBC conference next door, all the stuff that all the global investment banks are doing alongside. This is creating a really vibrant landscape, and that's where I think Hong Kong really stands out. All the stuff that's coming back after COVID and the virtuous feedback loops that are starting to form.
So keep tapping into the existing strength, keep doing what they're doing, tap into the talent, location.
I think it's a no-brainer. And after I talked to him for a few minutes, he's like, "Yeah, you're right. Let's find somebody in Hong Kong."
Well, on that note, thank you so much for your insight. Let's give them a round of applause. Thank you.